Nirmal Jain, founder and chairman of IIFL Group, joins us right now on the phone line. Nirmal, good having you. Thanks so much for joining in. Good morning, Neeraj here. These are not unseen times because we've seen these circuits get hit as well. Just that the last few days, the pace of the fall has taken a lot of people by surprise. What's your sense, Nirmal? Is this something that takes you by surprise as well? And what's your outlook on the way ahead?
Yeah, so this is classic capitulation that we have seen in the past also. But now I think it's getting exaggerated because of the impact of program trading, algo trading, and those machine-based trading where people do a basket selling. And the absolute the proof for that is that in the market opened with very low volumes, it just was down 10%. Now this kind of irrational behavior of the market many times is not decision of any human being because nobody, unless any fund manager is facing redemptions, would sell in this manner or these valuations. But the problem with today's market is that the bulk of volumes is happening, which is based on, as I said, the programmed trades kind of thing. Now, that's the reality of life, and we have to live with this kind of equity markets where you'll see very hugely volatile events, very volatile days, and nobody can be sure where the bottom is, but one is very sure that whenever it recovers, it will go higher from the levels that we have today. So if you have the stomach for risk taking and patience to hold it for some time, these are opportunities for long-term investors to buy. And in equity markets, so the one way to look at it is that markets have become volatile and we are helpless. And the other way to look at it is that now these kind of markets will give extraordinary opportunities, which otherwise would not have been possible.
Nirmal, good morning to you. While obviously this is a classic case of capitulation, as the saying goes, never let a good crisis go to waste. Do you feel, while everyone's been talking about how the growth is going to suffer, it's not going to be a V-shaped recovery for growth to come back, at current prices, do you feel that too has been priced in?
Yeah, I think that has been priced in. And only one thing I would say that now the blue chips are available so at reasonable price. One should be a little cautious and build a portfolio of high-quality blue chips because these kind of turmoil sometimes can cause casualties in, many small mid-cap companies. So you really can't, if you have a good quality portfolio, then I think it's already to my mind, we are at the bottom of the cycle in terms of economy as well as the peak of the panic for coronavirus may not be far away from us, whether it's today or a few days later. Both things put together, on the positive side, you look at it this way, that India has always benefited whenever crude oil prices have been low. So if you look at last 70 years history of Indian economy and markets, the crude oil has been one single biggest factor for our macro health. And if the crude oil prices remain low, whether it's because of Corona or Saudi Arabia and Russia and, US standoff, but that augurs very well. And the crude oil and commodity demand will remain suppressed, the way things stand today. So that augurs very well for India. And apart from that, the manufacturing movement from, say, China to India, which was talked about earlier, but might become reality very soon. So there are situations like this. There are some global MNC companies just sourcing 5% of their products from India and maybe 60-70% from China. China will still come back with a vengeance, but that 5% may become 20% because people are now really seeing risk regardless of cost. All these things, augur well for and also government is taking whatever is required to make sure that the financial crisis or the problems are handled, as quickly and as efficiently as possible. So I'm quite an optimist, and even if the global economies get into a stagflation or recession, whatever you call it, India stands a very good chance to come out as a bright spot, a relatively much better place than any other country today.
Right. Most Nirmal that we've been talking to have also, resonated that comment of yours that there is a possibility that India might actually outdo once the bottom is in place and once we start seeing the markets pick up. India is most likely to outdo the rest of the emerging market pack. Do you feel the same?
Yeah, I fully agree with you. That amongst all the larger economies of emerging market, India has a much better chance to recover. So, what happens, many large economies are exporters of commodities like Russia, Brazil, China. and India is a huge importer of that. So when the commodity prices go down, India actually stands to benefit. India is not a significant part of the global supply chain. So in a way, when things recover and also crude oil prices being low will benefit India a lot. So all these things put together, I agree with you that when the storm blows over and the dust settles, India has a very good chance to come out as a shining star.
Nirmal, in your wisdom, I take on board the point that some of the levels are maybe mouth-watering or looking very strong compared to what they were. The question is it possible to predict whether these levels tactically can become better based on your assessment of how flows are happening? You have your house has a large set of wealthy and institutional clients, both on the local and the global front. What is the talk there? Is money right now moving only towards safety, or is money talking even remotely about tactical deployments right now?
So I think, what happened is that the long-term investors probably would be looking at buying. Nobody will tell us precisely what they want to do. But initially, the way the market fell, so like it's a falling knife, people would like to, not catch it, but wait and watch. Again, how their actions will be driven by the news flow. So you really don't know what will happen over the weekend, whether there's a positive news or a negative news, and what, Trump and many other, the larger economies or their leadership, they will do. So there are a whole lot of factors. And, so supposing if I were a fund manager of the fund, I won't know myself, what am I going to do on Monday? Forget about my broker or anybody or media from that point of view. So only thing, so we can never predict the bottom. We can never predict the top also. But, prudently, if you really look at it, then you look at the levels, that the downward risk versus upside probability. So today, risk-reward ratio is hugely in favor of buying and investing rather than, doing anything else.
Nirmal, one more question. The old adage is that the leaders of the last bull run never become the leaders of the next bull run. Now, with the presumption that at some point of time when this bear market ends and the next set of upticks begin, do you reckon that the safety pockets in the last couple of years, at least, if not the last few years, which is the high quality financials, some consumption names, will be the first ones to get the money? Because there, the debate is wide open. The valuations of some of the industrials and commodities would be way lower, but people still talk about safety in the well-performing names.
No, you're right, actually. But so there are two scenarios. One is the immediate, maybe the money might get into those stocks which are already discovered as blue chip and investors feel comfortable. But medium term, I have a feeling, but nobody can be very sure that cyclicals and stocks that have not performed very well, maybe the very large PSU banks like SBI or stocks which are into the infra or commodities, some of them may perform well also. And also the mid-cap and small-cap have been massacred in this complete is mayhem. Some of them will also do well. So one should also look at sectors like chemicals, sectors like the gas distribution, all those things. And one can do bottom-up stock picking, because whenever market falls like this, the bearish sentiment may remain for some time. But the stock-specific, you can get very good returns. Because when the market goes down, the good and bad, everything gets hammered down. So it becomes a great time for do stock picking.
Okay. Nirmal, the themes that were in focus prior to this free fall that we've seen with regards to, and you just spoke about a few of them. Chemicals, for one, started to become the darling of the markets. You had a few diagnostic companies. Healthcare as a space started to, get a little bit more attractive. All that, does that add up now, or things changed looking at how others, which were less attractive on valuations, now are getting more attractive on valuations?
Yeah, so I think we have to see. Probably I haven't been able to see how valuations have changed, but obviously some stock would have fallen more, some stock would have fallen less. So the entire valuation metrics will be completely topsy-turvy. So I think once things settle down, then one can look at the prices and how their values based on their fundamentals. So maybe there's today I don't have all the information to comment on that.
But Nirmal, just you know, it will be an impact on the earnings EPS for the Nifty. We've seen in the Nifty now below its 15-year average in terms of its price to earnings 1 year forward. In light of that, how much of an earnings impact do you feel? We've had brokerages coming out and talking about a 7.5% EPS impact. Do you feel it could be more than that?
Again, you know, I do. So, okay, relatively speaking, India will have a lesser impact because the sectors that get impacted very badly by these kind of, virus and the travel and the lockdown of many cities in some countries. So, India has, relatively speaking, lesser impacted by this. Now, you know, I don't know how, again, you know, if you look at the larger companies in the Sensex and indices like ONGC and Reliance, so Reliance is diversified. I've not calculated numbers, but on the face of it, it looks like relative to other countries, the impact on earnings of Indian companies will be much lesser than the estimates before the crisis.